A few years ago, some of the richest people in America paid $0 in federal income tax. Not little, zero. See, reporters pulled the actual tax records. It was real and it was completely legal. See, the rich do not have a secret. They have a playbook. And today, I'll show you the parts of it you can actually use. I'm a licensed certified public accountant, and building this exact playbook for business owners is what I do all day. So I'm going to walk you through 5 moves the wealthy use to pay less, sometimes far less than some of the people who work for them. Some of these are billionaire level, and you and I cannot fully copy them yet. But I'll be honest about which one. But most of them scale all the way down to a business owner making a good living. And those are the ones that can change your tax bill this year. So stay until the end, because the last one is the quietest and it's where the long-term money is. So let's start with the move that lets a billionaire pay nothing. So here's the first thing to understand. You get taxed on income. The rich mostly do not have income the way you do. See, their income is in stock and real estate that keeps growing. And growth on paper is not taxed. You only get taxed when you sell. So they do not sell. When they need cash, they borrow against those assets. And here's the key. A loan is not income. You do not pay income tax on borrowed money. ProPublica reported that in certain years, billionaires like Jeff Bezos and Elon Musk paid 0 federal income tax doing this exact thing. Then the last piece. When they die, their heirs get the assets at current value and the built-up gain is wiped out for income tax purposes. So remember this, buy, borrow, die. Now let me be straight with you. You may not be able to fully run this play, since this is usually a billionaire play tier. But the principle underneath it is yours to use. You hold the assets that grow. You borrow against them instead of selling when it makes sense. Let time and the tax code do the work. Not all income is taxed the same. That is the whole game. See, a paycheck is the highest taxed money there is. Income tax plus payroll tax on top. The wealthy quietly convert that same money into lower taxed kinds. So business profits get a special deduction called QBI, which is up to 20% of that profit, which is gone before tax even starts. Long-term investment gains and qualified dividends get taxed at lower rates than your salary ever will. And profit taken as a distribution from an S-Corp skips the 15.3% payroll tax entirely. Same dollars, different label. Wildly different tax. This is something we set up for clients constantly. You do not need to earn more to keep more. You need your income wearing the right label before it even hits your return. This is the big one, and it's very real. The rich love real estate for one reason. It lets them make money and report a loss at the same time. And here's how. When you buy a property, you get to deduct the wear and tear over time. That is called depreciation. It is a paper expense. No cash leaves your pocket. Now add a move called cost segregation. It breaks down the building into faster wearing parts, and under the new law, One Big Beautiful Bill Act, those parts qualify for 100% bonus depreciation. You deduct them all in year 1. So a property that is cash flow positive and going up in value can show a big tax loss on paper. Here's the honest catch. Because most people online completely skip this. That paper loss only wipes out your other income if you or your spouse qualify as a real estate professional or you actively run it as a short-term rental. Line that up correctly and you can earn well and legally report far less. That is the engine behind a huge amount of quiet wealth. The wealthy do not spend after-tax money on things a business can pay for with pre-tax money. They flip the order. Watch a few of these. You can rent your own home to your business for up to 14 days a year, and that rent is tax-free to you. It's called the Augusta Rule. You can put your kids on payroll for real work, move money to them at a little or no tax, and deduct it. Buy a vehicle over 6,000 pounds for the business, and a big chunk of that can be written off in year one. Now the guardrails, because this is where people get completely reckless. Every one of these has to be real. Real work, real business purpose, and real documentation. And done right, it's an amazing strategy. But if you do it sloppy, it's an audit waiting to happen. This is exactly the kind of setup we build and document properly for clients. And here's the quiet one I promised you earlier. The wealthy shovel money into accounts where it grows without being taxed. And they do it at a scale most people do not know exists. So you've heard of a solo 401k. And in 2026, a business owner can put up to $72,000 or $80,000 if you're 50 and older. But the real move most people never hear about is a cash balance plan. See, for an older high earner, that can shelter well into 6 figures every single year on top of their 401k. Money in, tax deferred, and it grows for years untouched by tax. That is how quiet fortunes get built. Not by one big win, but with a bucket that never stops filling. So you push your income through the right plan and you shelter huge amounts while everyone else pays now. So here's the truth under all 5 moves. The rich are not cheating. They are reading the instructions. The tax code is a list of things the government wants you to do. Own a business, own real estate, invest for long term, provide housing, create jobs. Do those things and you get rewarded with lower tax. A paycheck gets none of those rewards, which is why employees pay the most. The wealthy simply moved to the side of the code that gets rewarded. You can move too. So here's the part that matters most. You cannot copy the billionaire tier. Not yet. But the millionaire tier, the entity moves, the real estate, the write-offs, the buckets, that is all yours. And business owners use it every single day. And almost none of it works after December 31st. This is a before year-end game. Once the year closes, the moves are gone. If you're making real money and you know you're overpaying in taxes, that is exactly what we fix at HK Financial Advisory. We build a plan, set it up correctly, and keep the most money legally into your pocket. Book a strategy session with my team. The link is right below. Do it while there is still time on the calendar to actually use it. And I'll see you on the next video.